Today we're going to go through home prices in Lynnwood. Second quarter is over. We're halfway through 2025. Where's the market been? Where is it going? And then what's happening from a larger economic perspective? What's happening with rates? What's happening with inflation and unemployment? I'm Anton Stetner. I've been selling real estate here in the Seattle metro, and I live personally here in Snohomish County. I've sold thousands of homes here. I have a real estate sales team. We sell on a regular basis. I do investments, and I dig through this data on a regular basis so that I can present it to you, just the facts of what we're seeing in the market and not some crazy media spin. We're going to look at the actual data together. So hit that subscribe button if you're one of my locals and you want to have conversations about real estate that are just real. Let's look at the average price here in Lynnwood. The average price last month in Lynnwood was $781,003. Basically about flat. And then next, let's look at the median. The median price was $775,000, also about flat. Let's look at this data on a rolling 12 to see if it gives us a better look. On a rolling 12, you can see that price in June was basically $759,000 on the median, up 1.2, and $782,000. But this market has kind of peaked. So I will tell you that parts of Lynnwood are essentially showing you right now in this data that there has been some depreciation or lack of appreciation inside of this market, and there has been some appreciation. In other words, there are going to be pockets of Lynnwood that are going to all be performing different. That's what you're seeing right there inside of those numbers. Let's look at new listings next. New listings, let's drop it back to the monthly. New listings up 5.1%. As you can see, the market always bottoms in new listings somewhere right there in the winter. Not surprising here in the Evergreen State. Homes for sale up 52.7% and pendings up 12.9%. Now, the homes for sale, that's the rise in active inventory. This is the thing that the media has been attacking everyone with to tell you the sky is falling. When you are going from an ultra low level and you move up to the next level, it could have a massive percent increase in that particular number. And that is mathematically true. And we talked about rates earlier, but understand is as those rates come down, more buyers qualify and activity will pop up, which will then start to constrict this supply because we don't have enough new construction coming. We already talked about that. So even though it's rising right now, there's not going to rise enough to cause prices to massively drop or correct. There's not enough foreclosures coming to cause it to massively drop or prices to correct. And in the future, as rates come down, because we all can see them slowly trending, even though they're not moving down as fast as I want or as fast as some of the people yelling at Jerome Powell want, we do know they are trending down. So let's look at closed sales. Closed sales about the same as it was last year. Days on a market averaged at 20 days, so basically about 3 weeks. Months of supply of pending, 2.4. I will tell you at 2.4 months of supply, this is less than some parts of Snohomish County. Okay, there are places in Snohomish County with definitely more supply than this. Understand months of supply is this measurement that basically allows us to identify whether in a buyer's market or a seller's market. You're in a seller's market. Above 6 months, you're in a buyer's market. As the market has cooled down, what's happened is this cooling effect because it's moving from white hot to a more normal operating market. People feel like, oh my goodness, the sky is falling. This is more normal. And I'm going to show it to you right in the data. So if we max this out, you can see that that's in line with about 2015, parts of 2015, parts of 2018, and parts of 2019. It's in line with pre-COVID amount of inventory for sale. It's not that big of a deal. This giant peak over here that peaked out at 12.3 months in July of 2008, that was the crash. This was the crash leading into it. You saw inventory explode. If the market does start to crash, you see original list price drop. You see inventory shoot up. You see it shoot up in multiple ways. You see active inventory explode, and you see months of supply explode. This is simply a rising, but because it was from such a low level, the numbers that are reported sound scary because they're big. That one's 33%. Percent of original list price. Let's take this off the max so it becomes a little bit easier to read. What this is showing you is the best time to buy is in the winter. Look at that. Percent of original list price is the amount the average buyer gets off a home. So last month it was 98.8, which means the average buyer got 1.2% off of a home. And in Snohomish County, this number averages around 98 historically. So above 98 is the start of the market heating and getting bidding wars. And below 98, the market is definitely cooling. And you can see that cooling happening like in the winter. Like in this year in January, it was 95.1. I mean, that means the average buyer that put their property under contract in November or December of 2024 got about 5% off. That was a good deal. Price per square foot, $416 a square foot. One of the things I always like to bring up with price per square foot is this is one of those metrics that you can resort the whole data set for an area by price per square foot, and something that is a low price per square foot may be a deal and you should investigate it more. What we like to do is we like to go low price per square foot and high days on market, and then look through each one of those properties to hunt for deals, opportunity, and motivated sellers. The average listing received 11 showings before it went pending. Pending means they accepted an offer, but the average listing only got 4.7 showings. So what I want you to understand specifically is that if your property is properly positioned inside the market, it's in good condition, it's properly being marketed, and you only got a handful of showings and not enough to go pending, then most likely it's the price. But you got to make sure that you're in great condition, that you're good positioned and good marketing in order to make sure your property is selling. And this is looking at the city of Lynnwood as a whole. Each neighborhood is going to be different. Each property is going to be different. And we believe that the deal season that we've been seeing on the buyer side and on the investors is going to go away as interest rates continue to rise, because these average prices and these median prices are really about flat. And as rates come down, expect Lynnwood to see an increase in their appreciation, in the rate of their appreciation. And understand that most of this appreciation always happens in the spring. So the rest of the year, expect the market to be flat or even slightly down, and that's completely normal. What I want you to realize is that these real estate statistics are for the whole city. So for your situation specifically, or your property specifically, we'd have to dig into the actual neighborhood, into what's happening in the market and that property. If you have questions about any property specifically, feel free to give us a call, hit us up at resg.com, drop any questions there down in the comments. Subscribe if you live here in the local area and you want to see more content about real estate investing, land development, the market, and just how to make more money in real estate. I'm Anton Stetner. Thanks for watching.